April, good to see you. I'm really glad we have a chance to talk today because a lot of people are feeling a little bit nervous. So, we're going to talk through 4 strategies for navigating market volatility. So, again, we've been hearing a lot of scary headlines lately. What's going on?
Well, change the markets never like change, and we're certainly experiencing a big wave of change. But
Yeah.
another thing that we're witnessing, and we've seen this time and time again over the years in different market cycles, different election cycles, black swan events, that the media is not designed to provide information that is boring and a summary of what's going on in the world. They are designed to sell headlines and to get viewership. And to do so, a lot of times what we see, and we all know this to be true, is a lot of fear mongering that goes on in the headlines. I had someone call with some concerns about the market just yesterday. And by the time I called him back a couple of hours later, those headlines had gone from fear mongering headlines about the stock market crashing that day to a complete 180, and the market ended up 1.25% on the day. So we really have to be mindful of the sources. And another thing that we're seeing right now, because the markets are at historic highs, you see a lot of headlines that involve things like big scary numbers of a several 100% or several 100 point drop, rather, which may or may not be more like 0.5% to 1%, but that's
Yeah.
not as scary sounding. So
No.
we've really got to give context to a lot of this.
Hmm. Really good point. I'm glad to hear you say that. We just need to hear a professional like you say it to help us calm down. So I do want to ask about cash because cash is often considered king during market volatility. Are you recommending people allocate a larger portion of their portfolio to cash right now?
One of the most important investing fundamentals is not to stray from those fundamentals, especially when we're in a period of time where we're in a new part of our political cycle here, new president, a lot of changes that are taking place. It is often an emotional decision and not one that is based in actual fundamental strategies to start making overall adjustments and overhauls to your portfolio like that.
Mhm.
Right now, interest rates are still pretty decent with a lot of cash reserves. We've seen them declining in recent months because of the interest rate environment that we are in. Always a good rule of thumb to have around 6 months of expenses that you can go and grab in an emergency. Of course, anything that you need set aside for large expenses as well. But I don't recommend an overhaul of this strategy. Often, if we're stockpiling more in cash, also, we're having to sell assets in order to do that, sell investments in order to do that. And human nature is exactly the opposite of the ideal investment timing. If we could time, which of course we can't, but of course if we could, what we would want to do is buy low and sell high. Human nature is exactly the opposite, is that people are more likely to invest when things are going well, because during that euphoric period they have more confidence, there's less fear. And then when the headlines get scary and when things start to go south, when things are more volatile, we see some market declines, which are natural, by the way. The market has to have some pullbacks. That's a normal thing to have happen. It's not going to be a linear line upwards. But what people tend to do is start to sell when the market is going down or when it already is down. It's just human nature. It's the exact opposite of what we would do if we could time the market. But this is why it's so important to have fundamental strategies that are well defined, that are monitored by a professional, and to really have a good checks and balances system in place to remove the emotional side from investing.
Mhm. I do want to ask about dividend stocks and fixed income investments like bonds. What are your thoughts on those?
There's an appropriate place for them in many portfolios. It's all about the portfolio construction that's appropriate for an individual. We have to, with dividend stocks, for example, we have to look at certain tax ramifications depending upon the type of account that we're utilizing this type of instruments in. But there are certainly some good dividend opportunities. We use a lot of structured notes in the majority of our portfolios. Structured notes have been a very good alternative to a lot of bond strategies in recent years, where bonds have become very volatile and have been very volatile for about the last 4 years due to the interest rate environment that we're in. What those structured notes allow us to do is to have a 30% buffer on average on most of those notes. We hold them for about a year. There's a 30% buffer. If one of those underlying market indices is down 30% or more, that's the only way that you're going to have risk to your principal due to volatility. And those yields have remained, 10% or north of it for quite some time now. So those have really served as a great alternative to some of those more volatile options in what's traditionally a more conservative asset class.
Mhm. Last, even during downturns, or especially during downturns, keep investing. This is known as dollar cost averaging.
Yep. Well, and we can't time the market. So stopping when you get scared or increasing it when you feel better. Oftentimes, study after study will show us that you're not going to come out ahead doing that. That the most beneficial way to invest, of course, we're talking about people who are still contributing during those accumulation years, is to do so consistently. And dollar cost averaging allows you to buy shares more frequently. When there is a dip, you're buying more shares. So stay consistent with not only your overall investment strategy and the fundamentals, but also with the contribution strategies as well. On the same side of that, this is also why it's really important to make sure that you've had an adequate assessment of how you're allocated. Because if you are in or near retirement and you're really concerned about the level of volatility that you're seeing in your portfolio, it could be a really good indicator that you're too aggressive for how you're currently positioned. So really good time with everything that's going on out there and the concerns that I'm seeing and hearing to make sure that you're fundamentally sound and invested appropriately for where you are.
And then last, this is just underscores what you've been saying the whole time. We should not be reacting emotionally, and we should be sticking to our plan.
Absolutely. Those emotional investing cycles, there are some great studies about that. The Dalbar study is one of them that I've watched for years. And it shows very consistently that institutional investing is always ahead of individuals. And one of the primary reasons why, in addition to the levels of access to certain types of investment instruments, is because they are fundamentally sound. They're not making emotionally based decisions like individuals often do. This is a great graphic. While it does say recession, this is really something that's true of volatile market
Anytime,
conditions and anytime. So, staying calm, not trying to time or beat the market. I know we talked about avoiding panic selling and staying the course. So some really good core fundamentals to make sure no matter where you are in the accumulation phase, in the preservation and distribution phase, in retirement, to make sure that you adhere to so that you come out, in the good.
Well, April, if anything, I do feel better after talking this through with you. But I think what you said too, saying that if you do feel unreasonably stressed by these headlines, maybe you should get a second look at your portfolio and how you are invested. So if somebody wants to come to you just again to talk or to make sure that they're doing what they should be doing, that they have that sound financial plan, what's the best way to reach you?
You can reach us 24 hours a day on our website. There's a contact form you can fill out there. We'll get you scheduled for an introduction call. And that website is theretirementfamily.com. You can also give either of our offices a call anytime, and we are certainly happy to get you scheduled and see what we can do to help.
Great. April, thank you so much for your time today. I really do appreciate it.
Thank you, Erin.